it's not just about learning how to make money. It's also learning how to navigate the rest of your life too. What's happening, guys? We have another Sunday video coming at you, this time for November 6th and the week ahead. That means it is Traders for Cause week. It is finally here. It's going to be a short week for me. I'm not going to be trying to trade on the airplane. I'm not going to be trying to trade while, we're out there doing whatever we're doing and having to be on my phone and try to manage positions. So that's the old me. That was me for 10 years plus, and that's not me anymore. So this week, again, is super busy. This scan is going to be super quick because I want to talk a little bit about last week, what's still working, and for the week ahead. Right now, obviously there's a lot of earnings reports and things like that are moving the market. I think a lot of people with the Apple pullback started to get short and think that things were going to pull back, only to have, Apple climb, all the way back. And then that just caught a lot of shorts off guard on everything else that they short. So one of the things that we always do talk about is not to underestimate the bear market rally, right? And so most times people are, the general public is not shorting stocks. The majority of people are not going out there betting on failure. And so what happens is when the sellers stop, most of the pullbacks is not necessarily shorts, retail shorts. It's, these are people that are maybe over positioned, margining out, or just a state of panic. And as you guys know, when you don't know what to do, you shouldn't do anything at all, right? And so what happens is as soon as that selling slows, if you're on the wrong side, I mean, that tape is thin and it goes right back up there. And that's exactly what we got. And so we talked about that on Thursday and Friday, where you don't want to step in front of these things. And the front side can be so much thinner than you think. No matter how it's trading on the way up, no matter what the Monday, Tuesday, Wednesday did, Thursday and Friday could be absolutely paper thin. And the reason for that is because people, taking options and have various short positions, whether it's in the actual stock or through selling calls and things like that, are forced to go to the market and then bid up the stock, buy the stock to hedge their risk against calls that they sold or, whatever situation they end up in. And like I said, most of the time, most of the retail, they're buyers. They're buying dips. They're buying, on the way down. And so when things finally run out of sellers, you've got no one in between here and here. It's no different than the liquidity pockets that we talk about, right? So as soon as the liquidity pocket it absorbs the last bits and then there's no more sellers, it goes up real quick and you look at it and you say, oh my gosh, that went up way too fast. That has to pull back. Like there's no way that one move can sustain. And then all of a sudden it does. And then it does it again, right? And well, there's no way that one can sustain. And then it does it again. So Thursday and Friday, I kind of came to the market prepared, knowing that, especially Friday, and I say this every single time, and I'm right every single time, but I never can still do it. I still never can do it, and that is, I knew it was going to be a gap and grind kind of day, and I know my own self that I need to not jump in front of stuff. I need to not think that things have run up too much, and just be prepared for that gap and grind kind of day. But for whatever reason, 15 years of doing this, I know when those days are going to be there, but I still can't chase that gap up long. And that was what you had to do the last couple of days. So at any rate, really, really nice end to the week for a lot of traders. Anybody that had been positioning in on the weakness, we talked about that as well. Sometimes people take a trade and they're buying it for long term, but then they panic in a day or two when it goes lower, right? So the reminder that I had said is, look, if you go in with a plan and it is a long-term plan, you're buying it for a year or 2 years or whatever out in the future, then a day or two doesn't matter. And if you're going to be bailing on the second day's weakness, then you sized up too much, right? So you need to be thinking about positioning correctly so that you can withstand the up and down. Because if it is a long-term investment, you shouldn't be that connected that one day will, panic you out. You just overpositioned. So anyway, you saw that kind of come to fruition this week, and the two ideas that I gave you guys last week was FAZ and LABD. And the reason why I put those ones on radar is because those ones were getting such a premium compared to how the market was unwinding. The market was kind of coming in and it was pulling back, but it was at the point where these things were really just compounding day after day after day. And what happens is there's a premium that gets built up. And the first sign that the market is no longer in panic mode, that it's no longer going to zero, that premium is just absolutely destroyed. And then as the market rebounds, each day they start to pull back and pull back and pull back until the next point where, there is that sort of panic. Even if the market pulled back, tomorrow, there's not going to be the same amount of panic as there was when it pulls back, rebounds, pulls back, goes one more day, and then there's all this panic that comes. That's when these ETFs go nuts. And it's being able to catch that rebound in knowing what products to trade that you can really capture some really intense pullbacks. So for anybody that watched last week, you guys know I went over LABD and I went over FAZ, and you guys can obviously see the trades and how those panned out. I think one of them even had like a 50% pullback. 20, almost 24 down to 1890s. And the other one was, I went over it at 29s and it's down to 2034 was the low. So big unwinds, literally 50%, had it done that the other way. So I guess it's pulling back about, 30%, 40%, something like that. But at any rate, good stuff. Bear market, again, never underestimate the rallies. And some of my macro thoughts, usually, you kind of get all ready for Monday. I think that people kind of don't expect these types of moves to happen. They get off sides and then they squeeze into the end of the week. And then come Monday, I'm always prepared, like, okay, they just squeezed it out. End of week, it's going to unwind on Monday. And I always kind of get a little bit too aggressive on Monday and then I miss the trade. But I want to be prepared for Tuesday and Wednesday in the event that we end up starting to pull back. My thought is that even if we had a weak open on Monday, or even if we gapped up, if we flush, I think we do have a good chance of pulling back and pulling back hard and aggressively. But when we pull back hard and aggressively, a lot of times those get collected. They start to collect those dips and then it rallies back hard. So I want to be cautious, getting involved, getting paid to fade the trade, getting of the mindset that, I'm right and this thing's going to unwind, it's going to go crazy, and then just having it slowly walk all the way back up. That's what I think might happen. So that's what I'd be kind of prepared for from a macro standpoint. One last thing before we get into the week ahead. Project Impact. I mentioned it last week, or at least I thought I did, and I think I did a couple takes of the first part of Scan, and because I got interrupted, and then I think I forgot to do it. So I was supposed to do it last week, but Zach sent out, I'm just reading it here, Zach sent out the Project Impact live stream today again. Today's the last day where if you end up pledging, which if you get Project Impact access, you get all of the year's past events, plus any other videos that we've added in there, plus live access to the stream this year, which is incredible quality. It really is. I was pretty impressed with the fact that it went around the audience with the microphone asking, questions and things, and that was all captured in high def 4K kind of quality. But at any rate, so anybody that does pledge, does do the Project Impact up till tonight. Tonight's the cutoff. There will be one winner chosen for an all-access ticket to Traders for a Cause, including an invitation to the exclusive VIP party on Thursday, one hotel room, for 3 nights, and this is valued at approximately $5,000. The only thing that you have to do, the only catch, is you've just got to fly there, walk there, drive there, whatever. Doesn't matter how you get there. Can't take a boat, but you just got to get there. And if that's something that interests you, just another reason to pledge and be part of the Traders for a Cause community. But let's get right into it. Think I'm going to trade very much next week. Obviously, I'm going to be in the air Thursday, and I'll be kind of out and about on Friday. But tomorrow, I was asked to do my uncle's eulogy, which is around 11 a.m. or so. So I just don't think I'm going to be of much use in the morning either. So all of that said, here's the main watches for the week ahead. And I know I didn't go over too much stuff. Hopefully you do find value on Sunday videos like the LABD and like FAZ. The idea is that if you're taking one concept that can improve your trading for the week ahead, then I've done my job. And it's not always going to be the same sort of scan. It's not always going to be like this is the exact one that I'm watching that come Monday, this is it. And we had a little bit of that this week, Wednesday, Thursday, Friday, where when the market has such big range, that kind of takes over. People PM me and ask me about what I think about PLTR or AFRM or names like that, which sure, you can have this grand plan and it's working perfect, but when the market starts to take over, these things all just kind of behave based off of the underlying market, right? So when the market's in the gutter, everything's kind of heavy and fading down. When the market can't, stop taking out new highs, these things will go further than you think. So you might have this perfect unwind. It might look perfect, but if the market says, hey, guess what? We're going to rip. Well, it doesn't matter if it was just about to break down. It's going back to highs. And so that's the part where I feel like people have a lot of difficulty is they have this perfect setup and it's doing all the things it's supposed to do, but then it just doesn't work. Why? And in this current market environment, I believe it's beneficial to have SPY up there. I'm not trading as many small caps right now because these mid and large caps are trading like small caps. So you saw me go to my wheelhouse, the SAVAs. SAVA was a fantastic opportunity on Friday, by the way, which I totally missed. But again, that's my own fault. But sticking with some of these trades, realizing when they flushed like SAVA did, came back trapped, they had that next overextension, and then it extended again. And most of the time, after we have maybe a little bit of difficulty or after we have one or two good trades, we take it off radar. But this thing set up again. And the more that you keep these things on watch and less of the noisy ones, less of the small caps, the ones that will pull your attention to them and take your attention off these ones, these are the ones that give me the high conviction, give me the ability to size in a little bit more versus something that maybe I'm not as familiar with. So anyway, we've got PLTR on main watch, and I've got this one up there. I would associate it with AFRM or stuff like U and any of these names that you typically would trade with a market rally. So PLTR was fantastic. Anytime that it has $1 or $2 a range, there's so many great opportunities for 30, 50, or dollar per share that you just have to wait for that setup. Don't force it. Don't size up in front. But once you're on that right side, it adds up over and over and over again. If that's your style of trade. That's what I prefer. I'm tired of all the swipes and all the craziness and all the traps and the circuit halts. So for me, when the market's like this during earnings season and all that stuff, this is where I like to personally focus. Saba was another one where, it definitely had a nice squeeze out. It trapped again, and we talk about, all the time kind of looking left. Once it got back up over these highs, we started to have that secondary squeeze out. So when it goes up, 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 you got 3 days in a row. My goal, just like this day, when I traded it short the first day over here, Same concept. It's up, it's up, it's up. Ideal goal is it gaps up and then it hits a wall, retest, and it fades. That's what we want. We want to be taking advantage of that gap up, that blowout move. People being forced out of their position, right? Shorts getting, called in and nervous and scared and margined out. And then you also have, longs that are like, oh crap, I should have sold. And then they start to unravel their position. But they will not unravel their position until, many times there's a reason to do so. Some sort of red day, stays red, it's not green. Every other day it's just week open, green. Nobody cares if it's green, but on red day, everybody gets a little nervous. So anyway, higher the better, verse 24 is on something like that. CPS, this one attracted me a little bit to the potential of continuation, and I was thinking as long as the 1780s hold, so I'd look for a relatively weak open, not too much. If it gaps down 50, 60, 70 cents, I'm not interested, but if it gaps down 20, 30 cents, starts to form a base and goes red to green, that's something that I'm interested in. And the volume is only about 1 million shares, less than 1 million. So a lot of times you see these moves and they actually will compound and do, $2 and then another $2. So that's why this one's on radar. And then we had CFLT. CFLT was a great range, really good opportunity. I started in just with a starter relatively early, and then I waited for it to exhaust out and then come back down to basically where I entered on the starter and then scaled in. But once it started to find a base, guess what? I don't want to fight that trade. So, you can see, and this just to kind of give you an example, this is where you let it do its thing, comes back, blowout, comes back, and it starts to find a top at this level. That's a trade that I'm interested in. But at the same time, when it starts to form a base and it starts to come and form some sort of top, then that top becomes the base. You got to know when to move on. So either way, this one should be great. We're in a market where, I don't know. Is this thing going to go back up to 2022 or is it going to fade off? All I know is we're probably going to have $1 or $2 of range. So I want to watch it. It had 60 million shares almost, then 20 million shares. So in my opinion, we're going to have a little bit less volume, but a much bigger move. And I think that we're going to have a $2 or $3 candle at some point soon. I want to be involved with that. And for me, it's probably like a 9:45, 10 a.m. plus type of join. Next up, failed follow through momentum. OTLK came back, way better than I would have imagined. And this thing had some news on Thursday, gap down, went all the way down to 20 cents. And then it already rebounded almost back up to 50 cents. So it's going to be interesting to see how this one plays out. But psychologically, 50 cents, right, is sort of the thought process. So right now we're around 44 cents or so. So ideally, we gap up 2-3 cents. We push up through or up to 50 cents, and then it starts to fade back off down to the 30s. So we'll see what happens, but either way, really nice rebound. I was very surprised with how far it ended up rebounding. FNGR, we've talked about this in depth. This setup over here, it should look familiar with all the ones I gave you. Just to refresh, we had ACHR. You can see the same setup right over here. We talked about WW, same setup again. And this was an idea for the last 2 weeks on Sunday video for the fade. And there's numerous other ones that I went over last week. So hopefully you guys were able to identify some of those. But once again, the other example I gave last week was FNGR, and again, we were testing towards those lows. So we know that it likes to save itself every single time it gets down here, but when and if it does finally break down, just like APLD took 900 tries, but once it does get down and break it, it still continues to unwind quite a bit, regardless of how much it's pulled back. So you can see how similar this move looks to FNGR. Right, and WW and ACHR. So hopefully you guys start to see this stuff. You were able to apply WW the last 2 weeks from Sunday video. That was a home run type of unwind trade. Next up on On the failed follow through, I have BTAI, and I'm actually still bullish on it, meaning I do think that it could still go up, but I am preparing for failed follow through. And what I mean by that is I'd like to see a weak open, and I do think that it might want to go back and retest this high, which was 478, 480s range. So ideally, we gap up, we push 485s, clears it out. And once either 5s or 480 starts to act as the top, I like that for a failed follow through setup. Next up is continuation side of things. Howell was pretty nice. That was a long idea on Friday. And this is a great example of, when it ramps up and it fades off, is this really bearish, or are they just letting shorts kind of, lean on it, hammer on it, fade it, and, kind of dig their own grave? And then you start to get this little rebound, comes back, and as you saw, it ends up forming, a higher low, a higher base. You have the first pullback. You don't know where this is going to be, right? But now it comes back and it forms a new base and then reclaims that VWAP level. So at that point, that's no more short, unless it starts to have a hard time and stays heavy at VWAP. So in this case, just continue to go into the close. So typically what I'd be looking for is some sort of weak open, and probably use, this level 310 as sort of the guide, and then potential breakout towards 350 or 4. In my opinion, they did a good job trapping shorts. And the reason for that is we had this one big day with the first volume day, came back, faded off. Everybody's like, all right, this thing's a piece of crap. Next day it gaps up. Everybody is trained to fade it, because we know it's a piece of crap. It just faded the last time it ran all the way back to lows. Then it held. And now all those folks are like, nope, I'm going to hold it because it was just at lows. And now they're still short. So that's the kind of thing. I look for the ease of shorting. I look for where people are likely to be most wrong, where they did get most wrong, and how it's trading from that point. I'm not interested in every stock that looks like a liquidity trap. I'm interested in the ones that paved the way, made it easy, let shorts win, let shorts feel comfortable. And it's that one that hangs around that should have died, that breaks over the prior key level, that I'm interested for that secondary squeeze. A couple other long ideas. MKTX did come back again. We had that huge day over here. I'm thinking that we might have one more good blow-off day, and I'd be looking for a 250 kind of clear out move, and then, sit back down, and we'll see what happens from there. Wrap, this one's been great. We had talked about this one last week as well, and this was a long idea. The idea was on the 190 break looking left, and then once it got back up over these other prior highs, which is around 2, and kind of formed a base, it never looked back, and it's been about a 50% move since. So I'd still be watching weak opens versus that 280 level, and we could be going, 320, 350, 4, and kind of see how this pans out. But so far so good. Good opportunities. Again, the volume is relatively low, so sometimes people look at the price action and they get in trouble. But anytime anytime there's 500K to a million shares on average that are traded, I usually tend to be a little bit more cautious, because I don't necessarily trust that it's liquid enough to offer an opportunity to get short without getting kind of run over. Then another couple just watches. IMTE has a history of liquidations, right? We know that this was a huge opportunity in the past twice. So it's just one that I want to stay familiar with, especially when they start to walk it back up on air. No, it's very hard to trade these. I know I have a couple friends that ride a lot of these long, and it's been great. Just like GDHG and all these. This is a clear GDHG I would compare to HKIT, right? Where they kind of walk up, they do a couple traps, things like that. We also had GMM, we also had NCL that keeps on going, right? And then we also have EJH, which we've been talking about for a double now. And you can see all the wicks, and it should remind you of something very familiar, which we had a little while ago, and I don't even know what day it was. This chart got messed up for whatever reason. Actually, I think it's over here. see. Yeah. So I think there was one candle that threw it all off. But let me see if I can get it. But yeah, so you can kind of see, history of doing this kind of stuff. So I would not be surprised if one day EJH looks like that, but that doesn't mean it can't go to 250 or 3 or 5 first, just like RETO screwed up a lot of people that were trying to figure out the top. So if you sit there and you slam the bids and it's the wrong time, you're going to go into a circuit halt. So for me, I'm not in the anticipation game anymore. That edge sailed a long time ago. Once people started to kind of find out about it and post it, that's when I was just like, you know what, I'm done trading these, just because the risk is too high. People don't know, when that ship has sailed, until maybe it's too late, and then they get too aggressive on the next trades because they missed out on the other ones, or maybe they did really, really well on one, so they want to do it again. But that one ends up being the trap. So it's very difficult with these to really anticipate, because one, if you go long, you're one day away from the day that it goes down 80%. If you short, you're one circuit halt from having no account. So, you got to weigh the pros and cons. So anyway, we dropped a interview that we did at the beach, Trader Dads, and I think you guys will enjoy it. It was me, Tim Grattani, Sanglucci, and Roland Wolf, and then Anthony moderated it. So hopefully you guys checked it out this week. A lot of people loved it, and hopefully, for some of you guys that are maybe starting to get into that, hopefully it can help you prioritize your life as well. There's all kinds of traders. I know a lot of 20-year-olds that are, coming into the market and badass traders, but, this does not apply to them at all. But it is things that I wish I had maybe considered earlier, conversations I wish I would have had earlier. And so if you are getting to the point where you just had a kid, or you're mid-30s, you're getting up, 40s, then, it's things to consider. Things that, this is 4 different viewpoints. But there's never a dull moment, and you can learn. It's not just about learning how to make money; it's also learning how to navigate the rest of your life too. So, and as a trader, it's you don't necessarily have as many resources out there to get the proper feedback, because how many people can you talk to about trading that actually understand it? And that actually will give you good advice without being like, oh, well, it must be a nice problem to have, So I thought it was a great conversation, and I hope you guys enjoy it as well. And once again, I will post the winners for the t-shirts in the scan. Have a great weekend. I will see a bunch of you guys next week. And once again, don't forget, if you want the Traders for Cause live stream, Project Impact is your access to the event virtually. You also get all of the other events, and everybody that buys today through midnight will be entered to win one ticket and your hotel room. And that's that. So have a great night. Have a good rest of your weekend, and we'll see you Monday.